Welcome to the Closing Bell with Dan Frio. I am Dan Frio, where our goal here at the channel is to educate and inform you guys everything real estate, especially when it comes to the financing part of the transaction. So I didn't do a midday report today because we're buried and there's news and news and news coming out, but a lot of it is just revolving around the Fed. So let's look at the highlights or the headlines right now and what's going on. So you see the fears of the Fed's mistake grows as this week's anticipated interest rate hike looms. So what's going on in the backdrop of all this? Well, let's go to the newsletter that I just pushed out there. And this is going to basically answer some of these questions or concerns for you. So we go over to this section here. Rocky start for the to the Fed's normalization revelation this week. The Fed has been in full-fledged policy tightening mode in 2022 with multiple increases in the level of concern. More concern means faster removal of accommodations. Let me highlight this whole thing. The key for the big rate spikes at the start of April was an allusion to the balance sheet normalization, both by Federal Chairman Brainerd and the Federal minutes released. The minutes laid out a specific target for normalization cruising altitude in its Wednesday Fed meeting that should specify the rate of the climb. So in English, let me tell you what's going on. So basically the Federal Reserve is meeting this week. They know they're behind the eight ball because they made accommodations to the economy that was needed at the time, and they overdid it and they stayed in it too long. Plus the federal government went out there and they stimulated the economy on top of it. So you not only had cheap money, you had a lot of free money. Okay, so now what happens is inflation's running rampant. And now the Federal Reserve is coming in saying we're tightening. And they can tighten the federal funds rate. That's the only thing they control, but that federal funds rate has a trickle effect to everything else. What is the federal funds rate? In its simplest forms, it's how banks lend each other money. So at the end of the day, let's say for Citibank, for example, this is just a hypothetical. Let's say in reserves, they have to have $5 billion in reserves every night. Before they shut their books, they look at it and they don't have $5 million. So or $5 billion. So they need some money. So they go out and they get money lent to them overnight, so they're compliant, they're solvent. That's what they do. So that's in its simplest forms how the federal funds rate works. But when the Federal Reserve changes that rate, it usually has a trickle effect through the economy. It'll start changing the prime rate and all this other rate, credit card rates, car loans, and all this other stuff. Okay, so that's the trickle effect that it's going to do. Well, the Fed's been saying that they're going to increase that rate by 25 basis points, 1/4%. And they're going to do it multiple times. And then they came back and said, we're really behind the eight ball. We're going to have to do maybe 50 basis points. And what shocked the system last week, they came out and one person said, we might even do 75, and the market's freaked. Okay, so that's basically what happened there. But we're going to probably see, I'm almost 100% confident that we're going to see a 50 basis point jump or bump in the federal funds rate. Well, a lot of this is already trickling into the system. So let's go over to see where are the MBSs and where are mortgage rates? How are they faring at the end of today? Because the Federal Reserve is meeting basically now, and they're going to come out on Wednesday and tell us what they're going to do. So let's get over to the MBS market. What is the MBS market doing right now? Well, let me get my big head out of the way, and I'll show you. Well, this is what's going on with the price of a mortgage-backed security. It's a bond that trades on Wall Street. As this price goes down, the yield, or in this case, the rate of the mortgage, because it's a mortgage bond, is going up. Okay, we can see the chart below. It's just a constant down, 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 down. All right, so what's that doing for rates? Well, rates just hit another peak that we haven't seen in quite some time. We just surpassed the 5.55 mark. Well, it's even worse than that. And I'll say it down through here. So let me recap this section right through here for you. 30-year rates are up over 1/8%. They're up 0.14 in just a 24-hour period. Now they're at 5.55 with a cost. So there's points. You have to pay almost a 1/2 point to get that rate. Okay, so if you net out this, because what we try to do is we try to tell you, what are costs? What's the rate if you didn't have to pay all these fees? Well, in this case, your rate would probably be at 5.6 or 5.625. Okay, so just 3-4 months ago, we were around 3. So this spike has been fast and furious. Let's go across the board because not everything was affected this much. Some a little bit less, some a little bit more. We have the 15-year coming in at 4.89. It's up 5 basis points, about 1/3 of what the 30-year fixed is. We have FHA or the government loans up an eighth. 0.125 across the board, coming in at a flat 5% right now. Jumbo's coming in at 4.68, up an eighth. And 5-1 arms are bucking the trend. Well, bucking the trend that they've been on. They're actually up over an eighth right now. They're up 0.17. Okay, these are some major moves for a 24-hour period. So these are not my rates. This is a national averages of rates across the board published by Mortgage News Daily, who does their darndest to try to keep us at least educated in this area right through here. What's the live report right now? Well, it should basically be the same as this, but let's see how the market did end. This is the live capture that I see, and we are down 17. So it ticked up just a little bit at the end of the day, and that's where we are. So tomorrow I will be back with the updates for the day and where we start, where we end, where the middle of the day, and I'll also give you my perspective of what I think is going to trickle through with the Fed's news over this week, next week, and give you at least where I see us being by midsummer and then those anticipations. So that's it for right now. So thank you so much for watching. If we could be of any help to you, we're a mortgage broker. Basically, we can help you all throughout the country. How you find out more about us is go to therateupdate.com. Pretty simple. And when you get to that page at the top right, you're going to see where you can call us, you can email us, you can apply online. There's even a chat bot there that you can ask any questions that you have. And somebody human, like one of myself and two other people, we respond to those chats. So thanks for watching, guys. God bless. Have a great night. I'll see you first thing in the morning. Take care. Bye-bye.